Hello and welcome to the week ahead, the 17th to the 22nd of April. Well, as we head into this weekend, we are very much looking towards the Doha meeting amongst all of those oil exporters. And we are seeing a degree of softness in equity indices ahead of that. A little bit of caution really, because expectations are very low and this could really mark the scene for how markets start to trade on Monday morning, particularly that of oil and the US dollar. Other than that, the week promises to be reasonably eventful. We have the ECB meeting, at which point I'm expecting to see a certain amount of jawboning from Mario Draghi in respect of the strength of the euro, but I don't really expect to see anything new from him. Certainly the negative interest rates are in play. He's had a little bit of respite owing to the surge that we've seen in oil prices over the last number of weeks. And again, Germany is very much against the idea of even deeper negative interest rates. So that might hold Draghi's hand for the time being. So with that in mind, the euro dollar is one of my trades that I'll be looking at next week. Now it is a very crowded trade, that is for sure, and it has failed at around 114.60 resistance at each and every turning point over the last number of attempts. I do believe that once above that 110.50 level, there is still a propensity for the euro to move higher. And this could ultimately be pushed a little bit higher again on the back of German zoo data, which is also due on Tuesday of next week. And that's showing a certain amount of global growth momentum. And we're hoping to see that continue, which could be a benefit to the euro to the upside, certainly against the US dollar. So at the moment, we are targeting that 114.60. And if we break through that, then it would be quite a slingshot move up through 115, 116 level. So all really to play for there. And given the fact that the Federal Reserve do seem to be sitting on their hands for a while in respect of tightening interest rates even further, then that could very well be the trade to watch. We also have Japan's trade balance due on Wednesday morning, and it showed its biggest trade surplus in over 4 years back in February, and that's down to the strengthening of the yen and the weaker oil prices as well. Now, this strengthened yen is a problem for the Bank of Japan, and they have stated that they will do whatever they need to do in terms of intervening in the FX market if it's deemed too strong. But much of what they've done recently has been reasonably subdued and certainly hasn't had the desired effect on the Japanese yen itself. So I'll be watching that one again. We have seen a certain amount of recovery in the dollar at the expense of the yen, and that has been to the good of the Nikkei, for example. But overall, below the 114 level, there is still a bit of downside in play. And certainly while we haven't reached my overall target for in around the 105.90, 106 level, it is still very much a possibility. I'm looking for any breakdown through the 110 level at this particular point. And of course, the resistance in the intermediate sense will be around the 111, with the overall topping resistance at 114. So watch for that. Any sort of Japanese yen strengthening will ultimately set us back on a path towards those levels. We also have here in the UK a little bit of a look at the UK labour market, and it's expected to remain fairly on an even keel. And ultimately we saw just on Thursday of this week gone by, the Bank of England do very little. No change to the structure of the voting. The QE remains the same and the interest rates remain the same. So for the time being, we have to wait and see what happens there. But many are expecting to see at least 2 voting members actually cut or vote to cut interest rates in the very near term. And that could very well send the pound back down towards and possibly through that 140 level against the US dollar. So in the run up to the Brexit referendum, a mere 9 to 10 weeks away from now, we can expect to see some choppy action. But when it comes to equity markets, I think oil prices will ultimately dictate the direction. And given the fact that we've seen quite a big surge over the last number of days, we could see some profit taking set in. Thank you very much for watching.